Hello, I'm Novelette, and welcome to Morgen Talk. My guest today is Ryan Kleis, who has been in the mortgage industry for more than 14 years and is the founder and CEO of Reverse Mortgage Educators, Inc. Hi, Ryan, how are you?
You get my camera straight. I'm good. Thank you.
Excellent. Um, Now, tell us, what is reverse mortgage?
So, over the years, I've found this is probably the easiest way to think of it. Um, you probably know how a regular loan works. You borrow money to either buy a house or you've refinanced a house and you have a loan on your house. And of course, you get your statement and your statement says, oh, you owe 1,500 for the month and you send your payment in. Well, that's a regular loan. That's easy to remember. But really, the biggest difference with the reverse and the regular loan is just the payment. So reverse mortgage, you can buy a house with it, or you can refinance. You get your statement, and the statement might say 1,500 is what the costs are for the loan. However, this is where it gets different. With reverse, you can say, I don't want to send in a payment this month. You don't have to. Instead, what they'll do is they'll take that 1,500 that you would have paid, and they'll simply add it to what you owe. So if you owed 200,000, next month you'll owe 200,000 plus the 1,500 you decided not to send in. So reverse mortgage is more like a system to decide when you want to make a payment and control your cash flow than anything else. Otherwise, it behaves much like a regular loan. You can pull cash out of your house, you can buy a home, and you can live there the rest of your life. And if you decide every month, I just don't want to send a payment in, the guarantee is that it doesn't matter how long you live and how many payments you decide not to send in, nothing's going to happen to you. They're just going to let that balance increase from what you don't send in. That's it in
Mhm.
simplest terms.
And for as far as who usually get reverse mortgage? Is there an age minimum that can apply for that?
Yeah, so 62 has pretty much been the age that has been for reverse mortgages for a long time. Nowadays, if you have a spouse younger, so maybe one person is 62 and a spouse is younger, we can do that too. A lot of people, maybe you might be 63 and your spouse is 58, so those types of things we cleared up because that used to be a problem in the past with our loans. But now, as long as you have one over 62, you can do the loan. Now, the thing that is important about age is that the amount of money you get on a reverse is dependent on the age. So the older that you and your spouse, or that you are if you're single, the older you are, the bigger loan you get. The younger you are, the smaller loan you get. So age is very important in our loans.
And so, what happens if, say, both spouses are no longer alive? They're both deceased. How does this affect the family?
That's a great question. So again, let's think of it in terms of like how a normal loan would work.
Mhm.
If you have a normal loan in your house and both pass away, the kids have to then, if they want to keep the house, they refinance and pay off that old loan, or they sell the home. But it's still the children's or the heirs' choice on what they want to do. Reverse is really the same way. When the borrowers have passed away, the heirs or the children can say, if we want to keep this house, we simply refinance and pay off what was owed on the reverse mortgage, and the house is ours. Or we can list it with the real estate agent and we'll sell it. And after that loan is paid off, whatever's left over is ours. So again, we see that a reverse mortgage is very similar to a regular loan because even basically the same thing happens when those borrowers have passed away.
So really, so reverse mortgage is sort of it's sort of like I guess you kind of lean on it. It's sort of it's almost like uh, I don't know how to best describe reverse mortgage in that you can choose when to make your payment. So what's the best
Yeah.
way to compare that, say, to a regular mortgage? And again, what is the big selling point of that for a retiree to go for that versus, say, just a regular mortgage?
Yeah. So you're starting to get the feel for it. It really is about cash flow and payment control with our loan.
Mhm.
And the reason why it's so popular is we really have a large percentage of our retired homeowners simply living on Social Security. And so you're talking about 15 or 1600 bucks a month for one person. That's the average. Maybe, 2500 for two people. That's literally the average amount that a retired homeowner is bringing in. So you can imagine putting a $15 or $2,000 a month mortgage on there that uses most of the income that's coming in. So this is why the loan exists and why people use it. Because you're really then what you're doing is you're allowing yourself to control your cash flow better in retirement. And you are saying, look, I'm going to use some of that equity in the house because if I don't make a payment, of course, I'm using a little bit of equity. But instead, I'm going to allow that to help me decide where I need to put my money at every month. And for many homeowners, putting it all towards a mortgage just doesn't make a lot of sense, especially for the homeowner that might have a lot of equity. And yet, if they can't get access to it and use it, maybe they're low on cash, but they got all this equity. So that's a struggle. So the loan really allows that equity to be turned into cash to use for everyday life. And so that's the benefit, is just having more control over your finances on a month to month basis. Yet what a lot of people don't know with the reverse is that now you know that you can actually control how the loan runs every month. It's not like you're getting a loan that you have lost control over or that you're being told what to do. You're telling the bank, this is what I want to do this month. This is how much I want to send in. This is what I don't want to send in. It's my decision.
Okay, I see. I see. And so someone wants to do a reverse mortgage. What's the first step?
Okay, so to do a reverse mortgage, first thing to do is just to see if you have the right scenario, right?
Mhm.
So since we need to know how old somebody is, because that determines loan amount, and we also need to know either the purchase price of the house they're buying or the value of the home that they're refinancing. Once we know what the house is worth and the age, we can determine how big of a loan they can get. So let's say that you have a client, 72 years old, and they decided they either want to buy or refinance a house that is $700,000. Well, we say, okay, based on your age, you will probably qualify for about 300. We'll make it very easy, 350,000. It's actually a little more than that, but we'll just say 350. So for a client that's buying a house, here's 350,000. You put the rest down, and now you have the property. For a client that's refinancing, we say you have 350,000 available. Now, if you have a loan on that house currently, we'll pay that off. So let's say you owe 200 on that house. We're going to pay that off at the 350, and you have 150 left to use as you wish. So to qualify or to start the process, we got to make sure the numbers work, make sure the equity is there, make sure the age is there. After that, we do want to make sure you got a little bit of money coming in to pay tax and insurance on the house, because that's still your responsibility, and keep the lights on, just incidentals. And so we do check to see if you have a little bit of income coming in. So it is, though, a loan that many people can qualify for when you can't get any other financing. And that's the other key to the loan success. For some clients, they just don't have access to other loans. They don't make enough money. They couldn't qualify for a regular loan to buy a home. They couldn't qualify for a loan to pull cash out of a house. The other loans that are out there would be too hard to get. Our loan can be given to someone with very minimal income and even bad credit scores. So this is another point as to why we see people doing reverses. Maybe when they've said, I don't even want to reverse. And I say, well, let's look at your other options. And when we look at the other options, I come back and say, this might be the only loan that you can actually qualify for. So at least it's there for you. And then when you get it, you just control it like you would a regular loan if you want to. But at least you can get approved to get the loan. And that's what's important.
I see. Okay, good. Thank you for explaining that. That helps a lot.
Sure.
Is there anything else that you'd like to share?
Well, I have so much to share. I've been doing these loans for a long time.
Mhm.
Probably coming up on 14 years. And what I have found is that we hear things about something. We read something. Maybe we see something on social media. Maybe somebody has told us about the loan. And that's the toughest way to learn about this thing, because you're usually going to get information that is not correct, right? You always got to go to the source to get the correct information. You always want to get it from the first person and not a third party, because everybody's experiences start to get in the way of what the product really is.
Mhm.
So I would say if you're an individual and you're living in your house and you're thinking, wow, I'm a little tight on money every month, or maybe the house needs some work, or maybe I really need to consider moving or downsizing to another home, finding something more suitable, and you either have checked out loans or you haven't been able to find a loan that works for you, you should just at least reach out and get the information from somebody who's been
Mhm.
doing these loans for a long time. Because what you'll find is that a lot of the things that maybe you were concerned about are actually things that never really were when it comes to the loan, but were somebody else's perception that
Mhm.
you have turned into fact. So let's get the correct information. Let's figure out if this thing is even right for you. And then you move forward. But it's just a loan. That's all it is. It's a loan on a home, like any other loan you get with the optional payment feature. Otherwise, you own the home, you choose what to do. It's your home, it's your loan. So that's the most important thing I think I could convey for anybody that's kind of concerned about
Mhm.
what might happen to them. So that's important to know. What happens to you with this loan is your choice, not ours.
Lovely. Thank you so much for sharing that. And thank you for talking to us today.
You're welcome. Thank you for having me. And of course, if you have any questions, reverse mortgage educators, I'm happy just to respond to questions with no obligation, just answering questions. Ryan at Reverse Mortgage Educators. Thank you so much for having me again.